Welcome to Markets Now. I'm Michelle Rook with Joe Kooima of Kooima Varilek. Seeing a little bit of weakness over in the livestock futures, at least to start this morning, with grains seeing some firmness kind of led by the soybeans. Joe, let's start off over in livestock, talking about cattle, seeing some pressure again here. We had lower weekly closes last week. Do you feel like that market is just cleansing this overbought status here, or is this a little bit bigger correction? Are we tired or topping, I guess?
Thanks for having me on this morning. I think we're dealing with a week that's going to throw a lot of punches or a lot of uncertainty into this marketplace, and I think some of that nervousness started to show up last week. We got that steady cash news on a Tuesday. I think we were setting ourselves up for a little bit higher market, but we didn't quite achieve that. And as steep as this trend is for these cattle, it doesn't take much, and then you can start breaking some of the short-term uptrend lines, taking out the week prior's low. So you're hitting some sell stops, and I think that's a general weakness that we saw last week. But if you look at December highs to the lows last week, it's $4, and we had steady cash, and we're back below the price of cash market. Maybe we got our correction out of the way here right now, but maybe it's a week we can't exactly muster anything, maybe more than sideways for a little bit, just with the uncertainty of tomorrow's election is certainly just going to play a factor, and none of us are going to have any answers to the questions that are out there, what's going to happen. It's just the known, the more the unknowns than anything with that. So I think that's why we're just starting out with the weakness here this morning.
Yeah, some nervousness before the election, I think, is probably happening in a lot of markets. Let's talk a little bit about the weight situation. That's a little bit of a concern here, obviously, but balance that against the fact that, we've got packers that are moving cattle around. They're picking up cattle right away. I mean, that seems encouraging to offset that.
Right. It's a balance issue between those two things of how current we are, but also throw this weird muddied mess of how can the weights be that big and not be backed up. And I think last week when we got those numbers out Thursday, it's almost like, okay, what is the tipping point? Because it's not like these weights just showed up last week. It's been a continuous thing for probably well over a year now that we're just bigger cattle over a year ago. I still think it's more weather related, that we just had fantastic growing from the northern belt down to the southern belt there, and that's been more of it. We don't have the days on feed by any means. That's why that choice select spread is as wide as it is, but just phenomenal growing weather. But it's a little bit, it feels like it's weighing on my shoulders a little bit more, seeing that weight data from last week and how explosive that it was. And that's going to take some time to kind of shake off just a little bit. So that might be the kind of the new, not the new bearish element, but the gorilla in the room walking around that's probably flexing the muscles just a little bit more. So it's going to be more of a concern in our eyes here temporarily. But hopefully having a $4 break on the futures also is maybe enough to kind of warrant that, and we can maybe move on from that status.
Now, what do you think, Joe, about the funds defending their massive long position? Commitment of traders is as of Tuesday, but still 99,000 or about that long in the market. Do you think they'll continue to defend the long? That's kind of a key here, isn't it?
Big defense mechanism going on. And last week we kind of saw that. We did take out, some lows from the prior week, but we kind of snapped out of it pretty good. And the funds were there to step on and say, no, we're not quite ready to kick the can down here right at this moment. But yeah, it's still a strong trending kind of a market. It fits what they like to have as a position. And I think they're in that balancing act too, where they know these numbers are tight. They hear that cattle in the north are being shipped south, and that's not a bearish element by any means. So it remains to be seen that they just want to have some length here. To be a fly on the wall in their meetings of what they're going to do, their positions would be interesting to note. But for right now, it looks like they want to stay long and kind of defend some stuff there.
Yeah, and on the charts, I know we have to kind of hold the uptrend line areas. I think the December live cattle contract, we really need to hold this 100-day and stay above that level, don't we? 100-day moving average.
Yep, that's always, the 100-day always gets talked about when you mention funds and their positionings there. So that's definitely something to keep an eye on here. We touched it last week, and we'll see if we have to touch it again, and see if we can see some defense there going on.
All right, what about these hogs? More contract highs here on Friday. We're consolidating just a little bit today. Not that we won't end higher. That's been kind of the mantra of this market here. But the funds are near to record long. Why are they pushing this, and do they keep doing that?
I wish I had the final answer to that question of what is really going on. Are we that tight of numbers? Where is it going? I mean, we can answer a few of those questions. The numbers are not reflective of what the USDA had a few weeks ago, of maybe going into 2 or 3, 4% more than a year ago. We're not killing 2 or 3% less than a year ago either. We're kind of status quo with that. You got packers probably up in the kill a little bit now, just because their margins are so large. But it is interesting with these funds of how long they are in December, and we have about 5 or 6 weeks left to trade that marketplace. So it is an interesting type of a setup. Where is some of this product going? I would say Mexico is just a large taker, have been for a long time, and our exports have been good. I don't know if I would consider them exceptionally great to have this cutout where it's at, and our dollar's been has been rallying as well. So it'll be interesting setup a little bit here moving forward. This export data typically is 3 weeks behind by the time we get it, and we've had product rally about $6 or $7, and the US dollar has rallied $4. So you think we'd be at a point where maybe things got a little bit too pricey too quickly. Maybe we back off there, but like I said, it's this next 2 weeks for December will be interesting to who's going to take on the funds, because they're going to be starting to roll here come the end of this week. So they're going to be selling D's and rolling back probably to Feb or to April. But we'll see who wants to take on that roll, because this index does keep rising with that higher cutout.
Yeah, and these are actual contra-seasonal moves and levels we haven't seen since 2013, 2014, in that area.
Yep, those are the 2 years that kind of stick out. 14 was a PED year, but prior to that, in 13, we had a good counter seasonal rally into the fourth quarter. December got to 92, cutout got above $1.10. But right into November, that market broke pretty hard. We broke at about $10 or $11. And I think that was kind of a function of the funds and their positions too, that they'll eventually have to roll out. So if a guy wants to look at a comparing year, I would definitely put 2013 right up front there.
And the grains are mostly higher this morning. Soybeans kind of taking the lead here. Do you think this is technical, or is this still some of this export business that we have coming at the market, strong underlying demand?
Yep, I think it's the exports, and it's not like this is a 2 or 3 week type of ordeal. With these sales at 8 o'clock, it's been working on 6, 7, 8 weeks now. So it feels like this market, especially corn and beans, temporarily, they just kind of feel like maybe this is just low enough for right now. What else are we going to talk about that's bearish? The crop is pretty much all out. It happened pretty quick. We know what the crop is in certain areas, but it just feels like that's enough for right now. We're going to go on to the next thing, and demand is right in the front of that as well.
Yeah. Do you think USD will make any adjustments on exports, either on corn or soybeans in the WASD on Friday?
That's a great question. I would say yes to that. Like I said earlier, this is not something that's just shown up in the last several weeks. It's almost a 2-month process now. So it's going to be, I think, kind of fun on Friday when we see those numbers come out. I'll be surprised if it's not. It's just been too good of a run here for demand that hopefully these carryouts do drop a little bit, and we then can talk about maybe finally having some rallies that have a little bit more topside. With the carryout at 1.9 for corn, right below 2 billion bushel. These 20-25 cent rallies, that's about all we can do. But if we can shave that down a little bit, then we can start maybe talking about 30-cent rallies or 35-cent rallies, and at least get some marketing here moving forward.
Yeah, I think probably more hopeful about corn, maybe exports going up than soybeans, but maybe we get both. That would be great. So
yeah, Yeah.
All right. Thanks, Joe. Joe
All right.
Kooima with Kooima Varilek. That is Markets Now.